The US dollar rallied as a blowout in swap spreads yesterday signaled demand for the US currency. Earlier today, the greenback was consolidating gains and it rose sharply in the New York trade. Following a collapse in global markets yesterday, investors expressed fragile optimism. Gold resumed the uptrend, so investors are revisiting portfolios in favor of the precious metal as protection against inflation, which could speed up by stimulus measures from leading central banks. The yen and the franc are retreating from earlier extreme highs. It means that traders have shrugged off fears about low liquidity. Now they're going to reckon the fallout for different countries. The US dollar spiked over 2% versus the yen in the late New York trade. Nevertheless, the dollar-yen pair could close in the red for the third week in a row. The US currency perked up amid high demand for liquid assets. Besides, the greenback found support from growing yields of the US Treasuries. The euro sank as the ECB decided not to cut interest rates. The single European currency failed to regain losses, so the euro-dollar pair is trading firmly lower, heading for 1.1000. Meanwhile, the US dollar index asserts strength. Its minor growth accelerated in the evening, so the index jumped to near 98 points. Yesterday, the Federal Reserve attempted to rescue the market from a tailspin, offering short-term loans. Some investors view this move as a precursor of more aggressive easing at the nearest policy meeting. Market participants also expect more measures from Donald Trump. Lawmakers and officials hope that the White House will soften its trade stance, so they advocate for lower tariffs on imports from China and other countries. The Canadian dollar is showing remarkable resilience, with its advance by 100 pips despite the firm US dollar and turbulence in the oil market. Even though oil prices are recovering today, they are closing the week with the sharpest fall in 10 years. Today, the US dollar versus the Canadian dollar pair is again climbing to a 4-year high at about 1.39. Most reputable analysts believe that the US Fed will trim the official funds rate at the policy meeting on Wednesday. They do not rule out a deep rate cut by 100 basis points and a relaunch of QE program. Markets expect the Fed to ramp up easing measures, as they are not convinced by the recent statements from Donald Trump. To sum up, the US dollar's reinforcement next week is likely to be limited. That's all for now. Thanks for watching and stay tuned.